Welcome to the deep dive. So, you asked us to dig into enterprise resource planning, ERP, and accounting information systems, AIS.
Right. These are really the engines running behind the scenes in a lot of businesses.
Exactly. We want to unpack how they work, what they're trying to achieve, and also how newer tech is shaking things up a bit.
Yeah, things like blockchain, for instance. We pulled together a good overview based on some detailed material.
Our mission today, just a clear, straightforward look at these systems. No getting lost in the weeds, hopefully. Let's jump right in.
Sounds good. So both ERP and AIs are about getting information flowing, but AIS, that's really zeroed in on the accounting side. Collecting, recording, storing data.
And reporting it out for decision makers.
Precisely.
Yeah.
And it generally breaks down into three parts, sort of subsystems. First, you've got the transaction processing system, the TPS.
Okay, TPS. That sounds like the day-to-day stuff.
Exactly. Think customer orders, converting raw materials, paying suppliers. It turns those economic events into actual financial transactions. Journal entries, basically.
Got it. And the second one.
That's the financial reporting system, or FRS. It takes all that daily TPS data, aggregates it, and handles less frequent things too. Think mergers, maybe. It's mostly for external reports, like your annual financial statements.
Right, the official stuff for investors and regulators. And number three.
The Management Reporting System, MRS, this is internal. It gives managers the financial info they need for day-to-day problem solving, budgeting, cost analysis, that sort of thing.
Okay, so TPS for daily action, FRS for external reporting, MRS for internal management. Clear. And you mentioned AIS has specific goals for transactions?
Yeah, 5 key things, really.
Mm-hmm.
The system needs to make sure transactions are, 1, valid, they actually happen.
Yeah.
2, properly classified in the right accounts. 3, correctly valued, the dollar amounts are right. 4, timely recorded in the right period. And 5, presented properly, summarized and shown correctly in the reports.
Makes sense. There's a kind of life cycle to the data then.
Definitely. It starts with data entry, often from source documents like invoices or maybe online orders now. Then filing those, making journal entries, posting to ledgers.
Then trial balances, adjustments, and finally the reports themselves.
Exactly. And the crucial part here is the audit trail. You need to be able to trace any number, say on the balance sheet, all the way back to the original source document. Or go the other way.
Super important for auditors, I bet.
Absolutely fundamental.
Yeah.
Okay, so how does this work in practice, like in the main business activities? The transaction cycles.
Yeah, let's talk about those. Things like sales, purchasing, HR even.
Sure. Take revenue sales and cash collections. A modern AIs can check inventory in real time when an order comes in. Maybe automate the credit check.
Oh, nice.
Yeah, and then record the sale and invoice simultaneously, trigger the warehouse to pack and ship. It updates everything as it happens.
In purchasing, similar idea.
Pretty much. It can check if a purchase request is okay, create the digital PO, track when goods arrive, match the invoice.
Yeah, and automate the payment. Streamlines things a lot.
Hugely. Same for HR and payroll. Good systems integrate HR data directly. New hires, pay changes, all that.
You mentioned Build Pros. They use something like this.
Yeah, they have a system where onboarding is digital and employees might clock in using like a geo-restricted mobile app.
So the time data flows right into payroll and cost allocation.
Correct. Labor costs get calculated, journal entries are made, the general ledger gets updated. Much smoother.
And this applies across the board. Production, fixed assets, managing cash.
Yep. Production tracks work in progress costs. Fixed assets tracks purchase price, depreciation. Treasury manages bank accounts, cash flow. All these cycles feed data into the general ledger.
The central hub again.
A central hub. And from there, the system helps generate trial balances, handle adjustments, and produce those final financial statements.
Okay, so businesses have these systems, but they always want to improve, right? How do they do that?
Generally, there are 4 big areas they look at. Automation is huge, using tech for repetitive tasks. Then shared services, consolidating similar tasks, maybe having one central accounts payable department instead of several. Outsourcing, paying another company to do certain tasks. And sometimes offshore operations outsourcing to another country.
And specific technology is driving this.
We're seeing a lot of robotic process automation, RPA. Basically software bots doing things like extracting data or filling forms.
Like reading invoices automatically.
Could be, yeah. Then there's natural language processing, NLP letting computers understand human language. Think voice commands, or analyzing text for financial data.
Interesting. And AI, like neural networks.
Right. Neural networks are modeled on the brain, good at pattern recognition. So fraud detection is a big application. Learning what normal transactions look like and flagging anomalies.
With all this tech, keeping things secure and controlled must be a challenge.
It is. That's where frameworks like COSO come in. The CFSO internal control framework has principles specifically around IT controls.
Like what?
Things under control activities like general IT controls and information and communication, focusing on quality data and clear communication channels. Think multi-factor authentication, data cleansing, regular IT reviews. That spinal surgery clinic example fits here.
Okay, now, blockchain. That feels like a whole different beast.
It kind of is. It's a decentralized ledger, meaning no single owner. It's designed to be tamper-resistant. Multiple parties validate transactions.
So potentially more trustworthy in some ways. Auditors could use it.
That's the idea. They could potentially verify transactions directly on the blockchain because it's, well, resistant to alteration and validated by many.
But wait, if it's decentralized, how do you apply something like COSO, which often assumes a central organization?
That's the million-dollar question.
Yeah.
It really challenges traditional control approaches. You can't just rely on central oversight.
What do you do?
The focus shifts. More emphasis on preventative controls built into the blockchain's code itself. And detective controls, maybe using AI to analyze the code or monitor transactions, things like KYCML. Know your customer. Anti-money laundering become more complex too. You need different skills, maybe cross-disciplinary teams.
Okay, so wrapping this up. ERP integrates everything. AIS focuses on the accounting piece. Both are changing fast with automation, new service models, and tech like RPA, NLP.
And blockchain, which throws a whole new set of opportunities and, frankly, challenges into the mix, especially for controls and auditing.
Right. Which leads to a final thought for you to chew on. As businesses lean more on these complex, integrated, sometimes decentralized systems, how fundamentally do accounting and auditing roles need to change? How do we keep ensuring data integrity and accountability when the landscape itself is shifting so dramatically?
It's a big question for the future.
Definitely something to think about. Thanks for joining us on this deep dive.